Hi, this is Roger Conrad, editor of Utility Forecaster. What I want to talk about today is the impact of the election and how that could impact some of our recommendations. Obviously, the big issue right now facing Congress is the health care plan and what happens with that. But for utility investors, the big one has always been the cap and trade, the carbon regulation, and so forth. As I pointed out before, the Environmental Protection Agency has kind of taken over that issue. So they're imposing rules and so forth on the industry. They could be challenged in court, but history shows that they're unlikely to be overturned once enacted. So we're looking at rules from the EPA probably as soon as April or March. The industry is, of course, trying very, very hard to get Congress to put something together. I think having the breaking of a supermajority in the Senate, you could argue, makes it less likely that any legislation will pass. But it also makes it more likely that if legislation does pass, it will be more benign for companies, in other words, giving them more time to adjust to carbon regulation, and with many, many more carrots than sticks, and that is incentives to develop renewable energy, incentives to develop carbon capture technology in an economic way, incentives to start using more natural gas because gas emits less than half the carbon of a coal plant. And many companies are in fact rushing to gas, replacing their coal with their gas. An interesting idea that some investors might want to check out if you're a little aggressive. Take a look at Calpine Corporation. It's come off quite a bit from levels that it held a couple of years ago. It was in bankruptcy in 2005. It emerged, and now the debt holders are basically the equity holders. But this company is much different than the one that dominated headlines in the late 90s and eventually cracked up in 2005. The main difference is deleveraging, extreme deleveraging. Part of that was the result of the bankruptcy proceedings and what was needed to get out of bankruptcy. But also another big part of that is just more conservative management. I call the generation of managers that came into the utility business and also in many regulatory commissions around the country, the class of '02. And basically these are people whose experiences in the utility business are honed by the disasters that befell Enron, the fact that after the collapse of the power marketing industry, roughly 24 companies were on the brink of bankruptcy or in bankruptcy. And these people basically turned the industry around, made it more conservative, deleveraged rather, and focused on the regulated businesses for growth. So a tremendous turnabout in managerial style that has served the industry very well. First with a 5-year rally that went from the end of 2002 to the end of 2007, and then finally with coping with of course, the financial disaster and the recession of the past couple of years. So it's a group that remains in charge at most of these companies, as well as Calpine, and it means that risks are generally lower, much lower than they were in going into the last recession. And that's despite the fact that this recession has been infinitely worse overall than the one that occurred at the early part of the aughts. So in any case, something to take a look at. A lot of natural gas, a lot of very natural gas-fired power plants, a lot of very efficient plants located in many areas, positioned on in areas such as renewable energy in California, which needs backup power from natural gas. So Calpine's in a good place. I think it's possibly a takeover target. What it's going to take to own it, it's a little bit of patience. It doesn't pay a dividend. But for those of you that are interested in something that could really give us a very big gain over the next 12 to 18 months, I think a very good play. So that's all I have to say today. Please tune in next time, and I'll look forward to chatting with you then.